Hey there, welcome back to Prime Pace Properties. If you have ever dreamed about building wealth through real estate investment but don't know where to start, you are in the right place. Today, we will dive into the topic of how to kickstart your real estate investment journey, right from understanding the basics to taking that exciting first step. By the end of this video, you will have a good understanding of how to start investing in real estate, even if you're a complete beginner. So grab a cup of coffee, hit that subscribe button if you haven't already, and let's get started. First, let's talk about why real estate is such an incredible investment option. Unlike stocks or crypto, real estate gives you something tangible, something which you can touch, see, or even live in it. Real estate is a physical asset that gives you a sense of security and stability, which is hard to imagine any other kind of investment options. Here are some of the biggest benefits of investing in real estate. Tangible asset. Real estate is something you can physically own, making it feel more real and secure than paper assets like stocks or crypto. Steady cash flow. Rental properties can generate consistent monthly income, helping you cover costs like mortgage payments or even provide extra cash for other investments. Appreciation over time. Historically, property values tend to increase over time. This means your investment is likely to grow in value while also generating income. Tax advantages. As a property owner, you can take advantage of tax deductions for mortgage interest, property taxes, insurance, and even depreciation. These can significantly boost your returns. Leverage opportunities. One of the unique benefits of real estate is leverage. You can use other people's money like a bank loan to control a valuable asset without having to pay the full upfront amount. Hedge against inflation. When inflation drives up the cost of living, property values and rental income typically rise too, making a real estate a great way to protect your own wealth. And that is not all. Let's look at a few more reasons why real estate stands out as a wealth building tool. Portfolio diversification. Adding real estate to your investments helps you to spread your risk, balancing out more volatile assets like stocks or cryptocurrencies. Forced equity growth. You can actively increase your property's value by renovating or improving it. This forced equity is a unique way to grow your wealth faster. Passive income potential. Once you have rented out your property, it can generate income with minimal effort, especially if you hire a good property manager. Generational wealth building. Real estate isn't something just for you, it's something you can pass down to your future generations, creating a legacy of financial stability. Multiple exit strategies. Whether you want to sell for profit, rent it out for a long term, or even turn it into a vacation home, real estate offers flexibility that's only few other investments can match. But here's the thing, real estate is not a get-rich-quick scheme. It requires planning, patience, and the right strategy. And that's why starting smart is so important. And that's exactly what we're going to cover next. Alright, let's break it down step by step. Here's what you need to do to start your real estate investment journey. Step 1 is set clear goals. What are you looking to achieve with real estate? Are you aiming for a passive income through rental properties, long-term capital growth by holding properties, or maybe a combination of both? Your goals will shape everything, from type of property you buy to where you buy it. For example, if you want rental income, you will look for high-yielding suburbs with strong rental demand. For capital growth, areas with infrastructure projects and growing population are key. Ask yourself a question. Where do you want to be financially in 5, 10, or 20 years? Once you're clear on that, your path becomes much easier to map out. Step 2 is understanding your budget. Now get a solid understanding of your budget. This is a critical step. Real estate is not just about what you can afford to buy, but also about what you can afford to hold. Start by looking at your savings, calculating how much you can comfortably put down as a deposit. Then speak with a mortgage broker to determine your borrowing capacity and understand what your monthly repayments will look like. It's also important to budget for additional costs like stamp duty, legal fees, property inspections, and potential renovations. And here's a pro tip. Always keep a buffer for unexpected expenses. Working with a buyer's agent like us will help you to align your budget with the best opportunities. Next step is to research the market. Now, look for areas with strong growth potential. These are the places with increasing demand due to rising job opportunities, good schools, or a new infrastructure like transport links and shopping centers. Check property trends, vacancy rates, and historical price growth in different suburbs. Tools like CoreLogic or Property Value can give you a wealth of data to analyze. Remember, location is key in real estate. Property in the right area can outperform one in less desirable location, even if it looks perfect on paper. And don't just focus on what is hot now. Look for areas with long-term growth potential. The next step is to build your team. You do not have to do everything by yourself. Real estate investing is a team sport. and building the right team is essential. First, you will need a buyer's agent. That's where we come in. Our job is to find the right property at the right place by saving you time and money. You will need a mortgage broker. They will help you secure the best loan depending on your financial situation. You will need a conveyancer or a solicitor. They handle all the legal aspects of buying a property. You would also need a property manager. If you're renting out your property, they will take care of the tenants and maintenance for you. Having a team of experts ensures you are making informed decisions at every step. And the best part, it takes a lot of stress off your shoulders. Set up the right strategy. Now let's talk about strategy. This step is often overlooked, but this is crucial to your long-term success. Before you purchase your first property, decide how you will structure the ownership. Here are some of your main options. In your own name. This is very straightforward and often the best choice for first-time investors, but it might limit your tax benefits or future borrowing capacity. Joint ownership. If you're buying with a partner or a family member, ensure you understand the responsibilities and potential implications of your joint ownership. Through a trust. Trust offers excellent tax and asset protection benefits, but they can be more complex and costly to set up. In a company name. This can provide liability protection and additional flexibility, but the tax implications may differ. Each option has its pros and cons, so it's a good idea to seek advice from a financial planner or an accountant to ensure your strategy aligns with your long-term goals. Final step is to take action. Do not let analysis paralysis hold you back. Remember, no investment is ever 100% risk-free. So the goal is to mitigate risk by making informed decisions and starting small if needed. All right. So now you understand the steps to start your real estate investment journey. Remember, every big success starts with a small step. So take your time, build your team, and most importantly, get started. And if you would like to have any help in understanding the market, finding the right deal, or negotiating the best price, we have got your back. Reach out to us today. We would love to help you to start your journey onto the financial freedom. If you found this video helpful, don't forget to give it a thumbs up and share it with anyone who is ready to start investing. Also, hit the subscribe button so that you don't miss our tips on real estate, peaceful retirement, and wealth creation. Once again, thanks for watching and we'll see you in the next video.